Senator John Kennedy isn't pulling punches, and today, he's taking aim at Vice Chair Michael Barr of the Federal Reserve. The topic? The stunning collapse of Silicon Valley Bank and the regulators who didn't see it coming. In this video, we break down Kennedy's fiery questioning, pointing the finger directly at Biden-appointed regulators and exposing the failure to act before SVB's meltdown sent shockwaves through the banking sector. If you're tired of bureaucratic doublespeak and want clear accountability, you're in the right place. Let's get into it. Let's start with the basics. Kennedy grills Vice Chair Barr with surgical precision. The Fed stress-tested 34 banks in 2022, right? Barr waffles.
Senator Kennedy, Louisiana is recognized.
Thank you, Mr. Chairman. Thank you all for being here today. Chairman Barr, the Federal Reserve, stress-tested 34 banks in 2022. Is that correct?
Senator, I don't have the exact number in front of me, but that
well,
sounds,
I have your report. I have your
correct.
report. It says 34.
Kennedy doesn't let go. SVB wasn't one of them, even though it had more than $100 billion in assets. Why? Because of a rule that conveniently delayed testing until 2024. Kennedy puts it bluntly. So you didn't stress test SVB, and even if you had, your test wouldn't have caught the real issue. You tested for falling GDP and commercial real estate, not the high interest rates and inflation that actually triggered the collapse.
And the cutoff was $100 billion. Is that right?
Yes.
Okay. You didn't stress test Silicon Valley Bank, did you?
No, under the Federal Reserve Board's rules that were put in place for transition into the stress testing, it takes a while for a firm to be considered above the threshold. Yeah. They need to have a rolling four-quarter average.
Did you stress test Silicon Valley Bank in 2022?
No.
Okay. Silicon Valley Bank had $100 billion, more than $100 billion in assets at the end of 2021, did it not?
Senator, as I was explaining, the transition rules in place at the time require a rolling four-quarter average to be above that amount.
Okay.
And then if the firm happens to be in a year that isn't the year that, since it's an every other year test, that a test is running, then it waits till the next year. So for Silicon Valley Bank, that would have meant 2024 would be its first stress test.
But the point is, you didn't test Silicon Valley Bank.
We did not apply a stress test to Silicon Valley Bank. It was, of course, using its own stress test.
Did you have the authority to do it?
Under our existing regulations, no. We would have to change our regulations to have that authority.
Under the Congress's amendment to Dodd-Frank.
Here's where it gets even more damning. Kennedy references Section 252.3, pointing out that the Fed had the authority to define how often to conduct stress tests. So why the delay? Kennedy's words land hard. You could have stress tested SVB, but you chose not to. And when you finally would have in 2024, it would have been too late anyway. And if you think this kind of fearless questioning needs more spotlight, smash that subscribe button and turn on notifications. We break these hearings down so you don't have to.
Senator Crapo talked about it, 2155. Section 252.3, isn't it a fact that we gave the Federal Reserve the authority to stress test Silicon Valley Bank?
Under that legislation, the Federal Reserve could have put in place a rule defining the word periodic,
but you
in a different way than was done.
Right, but you didn't, did you?
The Federal Reserve did not do that.
Okay. If you had stress tests, let me put it this way. If you had stress tested Silicon Valley Bank in 2022, it wouldn't have made any difference, would it?
I don't know the answer to that question.
Well, you didn't test for Silicon Valley Bank's problem. I've read your report. You stress tested these 34 banks for falling GDP, spike in unemployment, and defaults in commercial real estate. Isn't that correct?
Yes, in a typical adverse scenario for banks, we're testing falling interest rate
environments. But that wasn't our problem in 2022.
I completely agree with you.
It's not our problem today. The problem is inflation, high interest rate, and loss of value in government bonds, isn't it?
I completely agree with you.
So you stress tested in 2022 for the wrong thing.
The stress test is not the primary way that the Federal Reserve or other regulators test for interest rate risk.
But you stress tested for the wrong thing.
As I said, Senator, I agree with you that it would be useful to test for higher rising interest rates. That's why in our alternative scenario, multiple scenario that we put in place for this year's stress test, we do that. These decisions were made before I arrived.
Here's the kicker. Kennedy compares the Fed's failure to diagnose SVB's vulnerability to giving a cholera test to a patient with COVID. Different disease, same disaster. The 2022 stress test assumed falling interest rates. But the real crisis came from rising rates and long-term bond exposure, SVB's exact weakness. Kennedy forces Barr to admit it. This wasn't just a missed detail, it was the central cause of the collapse, and they were looking the wrong way the entire time.
But I agree with you that it
But
would
it's
be
like
better to
somebody
do that.
going in for a test for COVID and getting a test for cholera, isn't it?
I don't know enough about either of those tests to know.
Yeah. Well, they're different. So all this business about, well, the amendment to Dodd-Frank kept them from stress testing. The way I see it, you chose not to stress test, and if you had stress test Silicon Valley Bank, you wouldn't have caught the problem.
As I said, Senator, I agree with you that the statute requires periodic stress testing. The Federal Reserve made a decision about how to implement that in 2019.
Right.
That resulted in SVB not being planned to be tested until 2024. But as I said, the stress test requirements...
You knew from the... I'm sorry to cut you off, but the chairman's going to cut me off in a second.
Kennedy ends with a hammer blow. The Federal Reserve already knew SVB had an interest rate risk problem, and still, nothing was done. Barr quietly admits, yes, the Fed had flagged it, yes, they saw it coming, but no, they didn't act. This is why Kennedy's line of questioning matters. It's not just about one bank. It's about a regulatory system asleep at the wheel while depositors and taxpayers hold the bag.
But you knew, the Federal Reserve knew well in advance that Silicon Valley Bank had a problem with holding too much of its money in interest rate-sensitive long government bonds, didn't you?
I think the investing public and the Federal Reserve, which cited it for interest rate risk problems, knew that it had interest rate risk.
Senator Kennedy's interrogation exposed how politics and bureaucracy allowed a preventable crisis to unfold. From missed stress tests to a willful failure to act, this hearing was a masterclass in accountability. If you think Washington needs more straight talk and less spin, hit that like button, subscribe, and share this video. Let's keep the pressure on. Thanks for watching. Stay informed, stay bold, and remember, real questions still matter.